I'm sure by now you must have seen the news that Sterling Bank is offering their shares to the public, and it's opened on the 17th of September and it's going to close on the 30th of September. So the question is, should you go for the market price, which is currently trading as at the time of making this video 7.50 kobo, even though it has been ranging between 7.20 kobo and 7.90 kobo since Monday, but as at the time of making this video, it's currently trading at 7.50 kobo. So the question is, which one should you go for? Before I come down to that, let's quickly look at it. Why is Sterling Bank raising this public offer? Why are they issuing a public offer to new shareholders? Now, we need to understand that when a company needs money, whether to recapitalize, to meet short-term financial obligations, or to meet long-term financial obligations, or maybe to acquire assets for expansion, whatever reason why they need money, there are many ways through which they could get this money. Number one that is common is through debt, which means they go ahead and borrow money. So when you hear something like corporate bond, when you hear something like commercial paper is majorly when they need finance for short-term financial obligation, while corporate bond is usually long-term in nature. And there are other ways of getting funds like that, for instance through debenture and many like that, but don't let me go into that. Now there's what we call private placements. Private placements means, and Sterling Bank has already done private placements as regards this recapitalization that they need money for. They have already done private placements. They've done what we call rights issue. Private placements means they reach out to institutional investors in the private and they issue a certain amount of capital. They've done that already. They've done what we call rights issue. This was done last year in 2024, and rights issue simply means giving to existing shareholders to buy their shares at a discounted price compared to the market price. Then the last one is what we call the public offer, which they are currently having now. Now the question is, should you buy from the markets, or should you subscribe to this public offer? Now, before I answer that question, we first of all need to know, how has Sterling Bank shares, how has it performed over time? How has it performed? For the past 3 months, it has done over 32%. For the past 6 months, it has done over 39%. For the past 12 months, it has done over 84%. And over the last 5 years, it has done 540%. That's Sterling Bank. Now, coming back to, should you buy the public offer, or what's even the difference? Why can't they just take money from the market directly? Now, when you are buying from the market, the money is not going to Sterling Bank. It is money exchanging hands between market participants. Maybe you want to buy now. You are buying from a current and existing shareholder, somebody who is currently holding the stock. So the money is not going to Sterling Bank. Now Sterling Bank needs money, and that's why they are now coming up with public offer to say, public, we need money. So you as an existing shareholder, the question is, should you go for the public offer, or you should just go for the market price? One thing you need to understand, that if you are an existing shareholder, the best bet, if you are going on a short term, the best bet for you is to go for the market price. Just go and buy from the markets. Whichever stockbroker you are using, just go and buy from the market. Why do I say so? Because this public offer of a thing is still going to take a while. They are still going to have what we call collation. After that, you have to dematerialize your shares into your current shares account. Rather than going through all those ones in the short term, it is better you just go ahead and buy, because if you know that it is money you are going to be needing, it is money you are going to be needing maybe in the next 3 months, in the next 6 months, I think the best bet is just for you to go for the market offer, to go for the market price. Just go and buy right directly from the market. If you are not going long term, you may want to take advantage of that discounted price. Yes. Because another thing you need to consider here, if you want to consider the public offer, is that most of those charges that usually come with market price, which is the charges by your stockbroker, will most likely not all the charges will come when you are subscribing to the public offer. Not all, maybe few. If you know that you are going to invest a chunk of money in Sterling Bank, then it is better you take advantage of the public offer. That is just my own opinion. It is not a financial advice. Kindly do your own research and invest based on your investment objective. Now the question is, the money they are going to raise from this public offering, what are they going to, what do they want to use it for? When you look at, because this also will help you to make informed decision on what to do. They are going to use it for recapitalization, a part of it for recapitalization. They want to upgrade their technology and they want to expand their digital channels. How can you subscribe to this public offer? I'm sure if you already have a stockbroker, a mail must have been sent to you. So what do you need to do? You just need to fill the form and also subscribe to it via that mail that has been sent to you. I want to believe I received a mail that if I want to subscribe to the public offer, I can go ahead. But just like I said, for me, the collation, the dematerialization, all those processes are still there. So I would rather personally go for the normal market price, since I know that I could buy at 7.20 naira. So that's that for Sterling Bank public offer. If you are yet to subscribe to this channel, kindly do and click on the subscribe button so that you can be notified whenever we release a new video. So we meet in our next video. Stay blessed.